According to International Organization for Securities on Payment and Financial Market Infrastructure, market interoperability is a set of contractual and operational arrangements between two or more financial market infrastructure that have agreed to connect their systems and to operate together. You typically find this happening between exchanges and central security depositories, CSDs, basically. It's a structure that promotes liberalization, of where trading of securities take place versus where clearing and settlement takes place. If you look at most markets in Africa, over time, there have been establishment of multiple exchanges, multiple securities, central security depositories, over time. I think there was a time where some of these depositories were consolidating, to ensure that we can move from multiple to single. Where you see markets where you have a single exchange and you have a single central security depository, CSD, there's no call for interoperability because, single exchange, single CSD, they connect using systems and they can work. But what we've seen over time, the fact that we now have multiple exchanges, some of these multiple exchanges have come from either you have different exchanges that are focused on trading different types of securities. You have exchanges that are focused on trading equities. Some exchanges are focused on trading fixed income securities. And recently you're having exchanges focused on trading commodities, right? But when you compare what is happening in sub-Saharan Africa with what you see in more developed markets, you can have an exchange that is able to trade all forms of securities, both the plain vanilla securities and even derivatives, as the case may be. So when you look at small markets that we have in sub-Saharan Africa, versus the number of financial market infrastructures, you see that Africa is losing or missing out on scale, the scale that comes with having everybody together, right? So I think there's urgent need for market infrastructures to begin to interconnect so that you don't have to restrict the trading of a particular security to a particular exchange. An investor in this time and age should have the opportunity to choose where he wants to trade. And that takes me to how does it benefit different categories of stakeholders in our securities market. Starting with the investor, the fact that the investor is not restricted to say if you're trading this type of security, you can only trade it on this exchange because your depository account sits on this CSD. That liberalization it brings. When you look at what is happening in the virtual asset space today, I think that's what they do. The fact that they create multiple platforms where you can trade the same instrument, it attracts investors. I think secondly, apart from liberalizing the way securities are traded, cleared and settled, it also reduces operational costs. It reduces operational costs because the fact that I don't have to go and open, multiple accounts on multiple CSDs. I don't have to appoint multiple brokers on multiple exchanges. But once you can have systems and those systems are interconnected by the push of a button from when an investor decides I want to buy this security to how the order goes into the broker's book, from how the broker is able to trade on the exchange and how it flows from the exchange to the CSD and how it flows from the CSD to either the company secretaries or the transfer secretaries or the registrars, as we call them in some African markets, to how corporate actions are processed and how everything is captured on your custodian's platform. If you can do that, you reduce costs. I think another huge benefit is the fact that you move away from manual, to now technology-driven operational processes means there's more efficiency in operations. A lot of markets are pushing to reduce settlement cycle from T+3 to T+2 to T+1, like Nigeria is trying to do. Without market interoperability, it is trying to shorten your settlement cycle becomes a challenge. But where you have market where FMIs are interconnected in terms of the platform they use, it means that you can reduce the time it takes to move from trading to settling to clearing, to safekeeping, how you process your general meeting, how you process your voting, proxy voting, how you process your cash dividend payments, how you process your coupon payment or maturity proceed in case of fixed income securities. And I think in the virtual security world or virtual asset world, that's also one thing. The fact that you can trade and what you trade can settle as fast as possible, reduces investors' cost. Also, increases operational efficiency, reduces, the risk that you're exposed to. Talking about Rand Merchant Bank, either in South Africa, in Nigeria, in Namibia, Botswana, Ghana, or any of our footprint market, even our non-presence market. Rand Merchant Bank has been noted to be a lead market advocate, in pushing, in listening to what our clients want, especially our custody clients, security services clients in general, and what we also know, from what we see in other markets where we operate, that can help markets to develop and to attract more transaction flows. So RMB as a lead market advocate, over the years, we've been partnering with regulators and financial market infrastructures, either to issue guideline or to just encourage through moral suasion, leveraging the various trade groups, where we actually chair or where we participate actively. We have been at the forefront, working with our colleagues in the market, like I said, and also because of the reputation we have with regulators, having regulators listen to us when we engage with them, and in some cases importing some of the best practices that we have seen in other developed markets. If you look at Europe, for example, you have the Euroclear, you have the Clearstream. I mean, these are global CSDs, but they interoperate, and I think we've been able to push that in some of the markets where we operate as of today. So RMB keeps taking the lead. I would say that I think one major breakthrough that RMB recorded working with other market operators is in Nigeria, where 2021 we got the Nigerian Securities and Exchange Commission to issue the framework for market interoperability and FMI linkage. For me, I think that's a step in the right direction. What RMB is focused on doing is to work with the rest of the markets, talk about Ghana, Namibia, every other market where, our clients have interest and where there's still, silos in the way the FMIs operate. We keep pushing. And in those markets where we have the framework, we are also looking at those framework, see how we can have the right operational guidelines in place and also get the FMI themselves. So far, we keep our eye on the goal. I think if African markets can embrace interoperability as being promoted by RMB with the rest of the market, good times are here. We can see those markets develop faster. We can see bigger volumes of transactions. And I know many African markets need foreign portfolio investments, to help our currencies. And the time will be here if we can push for this one.